Okay, there you go. Okay, so so first some basics. What, where, why, when. What the unauditeds are the final reports from which the preliminary determination of allowable cost is made. In other words, you submit these statements for each entitlement budget period as the final unaudited accounting of your expenditures. DOS reviews the submission and determines if there is a carryover that needs to be budgeted on the entitlement contract for the next year. Where these are submitted to Department of State Bureau of Fiscal Management, they can be submitted electronically. We do, if you are going to submit them electronically, we do ask that you actually sign the form and then scan it. We can't accept actual electronically generated signatures, but we can accept the scan of a real signature. So that will just save us having to reach back out and ask for that. Why? Why? Because you are contractually required to submit these. They are the final report of expenditures, and they are also one of the payment criteria for in your payment schedule. Your second advance payment, which a lot of people know mostly as the 20%. When you submit your 20% periodic financial report, this triggers the second advance payment. But one of the criteria is also that DOS has received your unaudited statements for the prior year. So that has to be done in order for that second payment to be processed. When the unauditeds are due within 60 days after the end of the contract period. This is usually 11/30 because for the most part the contracts have an end period of 9/30. The only time it's different is in the last year of a multi-year contract, and in that case we can't carry over to the next contract because it's a new multi-year contract. So what we do is we extend the contract period from 9/30 to 3/31 to allow expenditure of the funds in full. And then in that case, the unauditeds aren't due until 5/31. So they are coming up due in a few weeks. So hopefully this is pretty timely. So as a little background, in 2020, the unaudited forms were revised to include detail more in line with the budget. This has allowed DOS to make a better determination that the costs incurred have budgetary approval, which is necessary for payment. This additional level of detail, unfortunately, resulted in the need for more final amendments. The requirement was no longer that you had to spend within the larger budget categories, but also for the smaller lines that were in the major categories. You know, and we got a lot of feedback from the network on this. A lot of concern was expressed, and you know, it generated just an additional amendment that folks hadn't been used to preparing. So we definitely heard that, and we met with the network, had a work group meeting to try and come up with a solution. And what we did come up with was a way to hopefully reduce the number of final amendments being processed. And that's via the 2021 unauditeds. So the unaudited form now contains a component that allows you to request and receive approval from DOS for minor modifications to the budgeted amounts based on your actual expenditures. So we're really hoping that this is going to eliminate the majority of year-end amendments. Maybe not all of them, but hopefully the bulk of them. So it's going to be a little different this year, but once we figure out what a minor modification is, or once, you know, we've been able to show everybody what a minor modification is, then hopefully it won't be too bad. So what is a minor modification? It is a change of less than 10% of the total value of the contract period between major cost categories. So that means between PS and contractual, PS and other direct, you know, contractual and other direct, whatever. Those are the major cost categories. I do want to point out that the 10% is for contracts of 5 million or less, which covers almost all of our contracts. We just have one that's in excess of that. So A minor modification also, the change does not result in the addition of new program activities. Um, so activities that are not part of the currently approved attachment C, the work plan. And it also does not result in the deletion of existing programs. Um, so if you do have minor modifications to previously approved work plan outcomes, that's allowable. A change or tweak to that is not considered a scope change. The one thing I would say is as we're starting this process, if you have questions about whether a modification meets these criteria or not, please feel free to reach out to your assigned program analyst, your assigned fiscal rep ahead of time, and they can help you work through it. A little later in the presentation, I'm going to go through some scenarios, and hopefully those will um, help you understand how the different components work as well. So what is not a minor modification? A change of 10% or more of the total value of the contract period between the major cost categories. Again, for contract less than 5 million, and then it's a change of 5% or more for contracts more than 5 million. Um, Another thing that is not a minor modification is a change in scope, which is the addition of new program activities or the deletion of existing program activities. So what I want to do is now tell you how you're going to request the modification and how DOS will actually approve it in the forms. So on Exhibit 1 of the unaudited financial statements, at the bottom of the page, there is a section that's labeled Modification Request and Approval. Here, you will include a summary of the changes to the major cost categories listed in Exhibit 1. Now, we have this summary box on each page, so you don't have to include all of the explanations on each page. So Exhibit 1, you're just going to cover any changes between the major cost categories. So then you will indicate the new budget amounts are based on changes in actual spending. And then the important piece of this is highlighted in red to draw attention to it, is you have to check whether the changes did or did not result in a change in the work plan and therefore the scope of work. If you cannot check did not, then the unauditeds cannot be used to process the modification request because it doesn't meet the definition of a minor modification. This doesn't mean that a modification can't be approved. It just requires a formal amendment, which is the procedure we followed in past years. And then by signing the request, you're stating that you are requesting approval of the changes and acknowledging that the modifications are not in excess of 10% and of the annual award, and that any change in the work plan would require a formal amendment. The New York State DOS authorized approval signature will be completed based on ARU. That will happen after the fiscal field rep, the assigned program analyst, and the ARU review the request for reasonableness. And if it's approved, then it will be signed by ARU and it will be returned to you in the same manner that you get your amendments now, so that you will have that copy for your records. The requires further action box and comment section, that's for internal DOS use only. I know we are posting the presentation, so I do actually, oops, here's a little summary, a narrative summary of what I just covered, so that you will have it there to refer to. So I don't see any questions yet in the chat. I'm going to go through the scenarios, and then after that, we can open it up for questions if anybody has questions before we move on to just a review of the statements themselves and the fiscal field rep review. So all 4 of these scenarios assume the same budget. So they assume that the budget from 10/1/20 to 9/30/21 is $250,000, which would make the 10% threshold $25,000. So in total, PS was underspent by $10,000, And in total, other costs were overspent by $10,000 on activities that are part of the currently approved work plan. This could be amended with the unaudited because the change between the major cost categories, PS and other direct, is less than 10%. And the activities are already part of the work plan, so this is easy. It could be approved with the unaudited. Kevin, I see your question and I will get to it as soon as I finish the scenarios. Scenario number 2, same parameters, $250,000 contract, so 10% is 25. In total, PS was underspent by $30,000. Other costs were overspent by $30,000 on activities that are part of the currently approved work plan. This cannot be amended with the unaudited forms because the change between the major cost categories is more than 10%. Even though the activities are part of the currently approved work plan, it doesn't meet the threshold test, so it would require a formal budget amendment. Again, not saying that it can't be amended, it just can't be amended with the unaudited. Scenario 3, within PS, there are changes totaling $30,000 between already budgeted employees performing activities currently in the approved work plan. This can be amended with the unaudited financial statements because there's no change between the major cost categories. All changes are within one category, PS, and the activities are already part of the approved work plan. So this does meet all of the components of a minor modification. So you could use the unaudited for this scenario. And then the final one is within the PS category, there are changes totaling $10,000, including the addition of 2 employees for a program that just started and is not already part of the approved work plan. This cannot be amended with the unaudited because this does not meet the definition of a minor modification. Although the 10,000 is below the 10% threshold, the addition of new activities that are not part of the work plan are going to require a formal amendment. So let's see, we can open it up for questions. If anyone has one, let's see, Kevin. We are awaiting our CSBG entitlement amendment, so don't have concrete confirmation of approval of the budget. Will this be a problem? I should add as the executed amendment we have not received. Is that? We have not received. So yeah, I mean, the unaudited should be submitted based on an approved amendment, approved budget. I would say reach out to your assigned fiscal rep program analyst to find out where it is in the process, and then they can direct you better. But yeah, the unaudited should be submitted based on an approved budget. Do we have any other questions? Mute yourself and receive a copy. Okay. So we'll receive a copy of the presentation. It is a really good reference tool. Yes, yes. We will have carryover for 2021. Do I still submit? Yes. Oh, no, I'm sorry. So yes, Dawn asked, we have carryover for 2021. Do I still submit the unaudited by 11/30 or is it not due until 5/31? So yes, we are in the middle of a 5-year multi-year contract. So they are due 11/30. Once you will show the carryover and then that carryover will be budgeted onto your 2022 contract. And then you'll have the remaining time to spend that on your 2022 contract. And we will have to let you know about CARES. That will end next year. And I don't think final determination has been made on what the final reporting will look like. So can't answer that right now. Any other questions before I move on? No? Okay. So now what I want to do is just kind of give a high-level summary of the unaudited themselves, the different exhibits. Let's see, is it 10% of the total budget or line by line? It is 10% of the total budget. So actually, let me go back here just a little bit. Where's one of the 10,000? Okay, so if your total budget is 250, the 10% would be $25,000. So when you're trying to figure out how much the change you're making is, so in this scenario, PS was underspent by 10, other costs were overspent by 10. So you're not going to add those two together. Your total change here is just going to be $10,000. It's not 20. So it's just either the total of all of the additions or the total of all subtractions, whichever way you want to look at it. But it's 10% of the total budget, and you're just looking at one side of the change too. So your total change in this scenario would be $10,000. So it's definitely under the threshold. ARU is sending out CARES amendments forms. So if you need one, you can reach out to your program analyst, fiscal rep, and the ARU will forward you the appropriate forms for the CARES amendments. Okay. All right. So Exhibit 1, and this is this is going to be familiar to those of you who've completed this before, new to anyone who hasn't. Um, this is a summary of the approved budget, the actual expenditures, and any variances. This should look familiar. It's based on your budget page B1, so that's how it's structured. In the first row, the first column, you're going to have your contract amount will be reported in column 1, and then the total of actual payments received from DOS will be reported in column 2. The only time that these numbers won't match is if your final payment from DOS wasn't processed by 9:30. This does happen occasionally. And if that's the case, there's a place on the CSBG balance sheet that you'll report a DOS grant receivable. And I'll point that out when I get to the balance sheet. And then the last number in column 2 is revenue over expenditures. This is where your carryover amount comes from. It can be referred to as your fund balance. And this year it's going to automatically populate from this cell into your balance sheet as your fund balance. So what's new this year, and we colored it blue so that it stands out, your amended figures. Column 4 is where you're going to put in the amendment request based on your actual expenditures. So once you have approval, column 4 will actually be your new budgeted amount for those figures. Let's see. And again, just to help out when you have this for reference, this is just a narrative summary of what I just reviewed, what's in the different columns and how they are. So the next exhibit is the prior year carryover. So I do want to talk about the prior year carryover. So you're going to fill out your actual, which is your budget approved, your budgeted, your actual. If you have an amount in the last row of column 2, an unexpended amount, you will lose the ability to spend these funds. Okay, so you're entitled to 2 years to spend your funds. So carryover dollars represent funds that were unspent in year 1, and therefore you've budgeted them in year 2 to allow you the opportunity to fully spend. If you have a balance here, that means that you have not spent those funds by 9:30 on year 2, and they will lapse and they will no longer be available to spend. If this happens, you would then need to pay the funds back to DOS, and DOS then would need to return the funds to HHS. We definitely work with folks to try and minimize this. We do ask that you spend your carryover funds by 3/31. That way, if we see any subrecipients that are having issues or unable to spend, we can work with them, provide any technical assistance that we can to help them fully spend, because we don't want anybody losing the funds they're entitled to. We know that you have good things to spend them on, so we want to make sure you have that opportunity. In here, we also added a fourth column for you to change any budget amount based on actual expenditures. I don't anticipate this column being used often, just because the carryover is usually budgeted and spent fairly early on in the contract period, but it is here if it's needed. Again, just a quick summary of that form for reference. Exhibit 1A, the salary detail page. On here, you'll find the position title, the initials of the employees that held these positions during the year. And if you have turnover, there may be more than one employee in a specific position, which is why we added column 2, so that you can add the initials of all the employees, and that just helps keep track of the salary that was paid for that position. On here, you will also fill out the current annual salary for the position and the approved budgets for the current and prior years. Column 6 and 7, you will report the actual expenditures, and then in column 8, that'll just be a total by position. And again, if there's turnover, this might have multiple people, multiple employees in the same position. So we just want a total for that one position. Columns 9 and 10 are where you will enter the amounts being requested to amend based on the actual expenditures. And this is where I expect to see the most changes that are being made, because based on what we received last year, most of the changes happened in B2 in the salaries, just small, variations between the different employees, which is, hard to predict down to the dollar when you're doing your budget. So hopefully that will be helpful. Again, just a narrative summary for future reference of these different columns and information that's in them. Exhibit 1B is the direct detail and should look familiar. It's based off of the attachment B of the budget, follows the same format as the other exhibits. The approved budget for each of the lines, and then the actual expenditures, a total, and then column 6 and 7, where you will enter the amounts being requested to amend based on the actual expenditures. So, and again, just a quick informational narrative for reference. So the other thing that I want to point out is on each of these exhibits, there is now a comment box to explain or give a brief description of the reason for a change. We also just wanted to reiterate that changes in major or minor budget lines require justification and a request for authorization to modify the budget, which is what's being submitted. This must be approved in writing by Department of State, which you will get back. And some changes between major cost categories may require a formal contract amendment as required by your terms and conditions, which is what I reviewed earlier. If the change doesn't meet the definition of a minor modification, then it would require a formal amendment. Next is the balance sheet. So this is used to report the status of the CSBG funds only as of 9/30. So as with any balance sheet, the total of the assets should equal the total of the liabilities and the fund balance. So if you have CSBG cash on hand, it would be reported here in the cash cell. As I mentioned earlier, if you have not been paid in full on your contract, you would report the grant receivable here. And that just helps us to make sure that everyone gets paid in full. Sometimes when we've had those small increases at the end of the contract year, sometimes those lag behind, and we have to catch those up after 9/30. So this just makes sure gives us a double check to make sure that we don't miss any of those. Liabilities, accounts payable. That number is going to pull directly from the accounts payable tab, and you would report any payables that you have for CSBG. I can cover that on the next slide. Any accrued payroll, fringe, would be reported here due to other funds. If you have had to utilize unrestricted funds for any reason to cover CSBG expenses as you were waiting for a payment for cash flow purchases, you would report that here. And then include information on who the funds are due to. Like I said, that's usually just an unrestricted source. And then the fund balance. And this, like I said, is going to pull directly from Exhibit 1. And once that's confirmed, that's going to be your actual carryover that you will report on the next entitlement contract. The accounts payable form. For all the CSBG payables as of 9/30, you will list the payee, the amount of the payable, either the check number if you paid by check, or if it was ACH, you can enter ACH there, the check date, or if it's ACH, the date the payment was processed. And then everything that was a payable as of 9/30 should be reported here. I'm going to go through briefly what the fiscal field reps look at for this in a couple more slides. And then the last exhibit is the schedule of fixed assets. So if you have purchased any asset with CSBG entitlement funds costing more than $5,000 during the contract period, you should list it here. You will answer if these are recorded in your fixed asset management system, and if not, provide an explanation. Okay. So I don't see any questions. Does anybody have any questions on the forms themselves before I just give a summary of what the fiscal field reps review when they do their unaudited financial statement review? Don't see anything in the chat, so we'll keep going. All right, through the course of the unaudited review, the fiscal field reps will, oops, I'm sorry, AP would be aging, correct. So it would be any AP outstanding. You don't have to, this wouldn't be an aging report. Anything that is outstanding as of 9/30 would be reported here. Did that answer your question? Okay. Okay. And then there's another question. Do you want to unmute yourself and ask?
Hi, this is
Hi.
Artis from DYCD.
Hi, Artis.
My apologies. I entered a little late.
Okay.
When you were on the PS slide. Do you mind going back to that for a bit? Is that okay?
Sure. Oops, where did we go? This one?
Yes. So when we submitted the refunding application, we did not give names, we give titles. And last year when we submitted the 2020 refunding applications, we based that on titles. So titles are no longer required for 21 and out?
Oh, no, the title's going to be in column 1. Yep, you'll still,
okay.
It'll be by title. And then it'll just be initials in column 2 for the employees that held that title.
So it's possible that in each row for a title, I might have 20 people. I know that DYCD, New York City, is a little different from the rest of the state. That's okay?
So it should, well, that's possible if they held that position, yes. Yes.
Oh, wait, I'm sorry. So by position, so.
Right, yeah, I think you
so
guys actually
spread
them out now. Because I know in the past you used to do it a little bit differently, but I think you have each title lined out now.
I don't, we have the titles lined out, but there are several people within that title, and they will be covered over several positions. So we can have several people at DYCD because we use the civil service title. We don't use functional office title. We use civil service title. And because of that, we have several people in the same title, but they most likely will be in different positions.
Right. Artist, how about, can we talk about this afterwards?
Yes,
Okay.
yes,
Is that okay?
that's fine, because I have a lot of other questions about it. So yes, if we can talk about it, that'd be great. Thank you so much.
Yes, yeah, no problem. Thank you. Well, the 10% threshold for amendments. So again, we don't have, we haven't finalized what the final reports for CARES are going to look like at this point. So, that's not going to end until 9/30/22. So I don't have any answers on the CARES reports at this point. Sorry. Okay. Okay. So the fiscal field rep review of the unauditeds, they basically they just reaffirm that the signed cover page was received, that all of the required pages were received. Even if you have no accounts payable or no fixed assets to report, those should still be part of the submission package. Those should be included. The fiscal field rep, will just trace basic information. They'll make sure that the contract number is accurate. They will verify that the budget amounts on each of the exhibits matches the approved budget. And then what they will do is ask you for expenditure reports that are system generated. Usually they'll ask for several different ones depending on your accounting system. They'll ask for a full detailed transaction expenditure report, whether that's your ledger, whether it's a cost detail, whatever your system calls it. They will trace your actual expenditures to the expenditures reported on Exhibit 1 and in Exhibit 1B. They'll also just do a cursory review of all of the expenditures just to see if anything jumps out that might be unallowable, that might need further review, that may not currently be budgeted, that they might have a question. They also will review the payroll records. And what they will do there is trace it by position. And that's where a little bit of reconciliation usually comes in, because a lot of the payroll records are by employee name. Our budget is by position, which is why we've entered that initials column to kind of help reconcile the two of those. And they will just trace the actual amounts reported to the payroll reports. They will also trace the amounts on the balance sheet to your books and records, whether it be a trial balance, the ledger, what have you. So in the accounts payable specifically, they will look at each item that's reported on your accounts payable listing. They will look at the paid invoice or supporting documentation. What they will want to do is they will pay particular attention to the date that the cost was incurred to make sure that it's within the contract period. Because those are generally expenses that have occurred later in the contract period, and that's why they're still outstanding as payables. We just want to make sure that the cutoffs are maintained. If something is identified that perhaps your contract ended 9/30 and it's actually a 10/2 expense, at that point it would be disallowed from the contract, and your carryover would then increase. So that being said, that the next year, if it was properly supported in a proper cost, if the only problem was the date that it was incurred, it could be included in your next year's contract, and your carryover be spent as part of your carryover. So if there's a disallowance just for the date, chances are it'll be able to be reported in your next year's contract. As part of the payable review, they also review the canceled checks or, bank statement, payment verification through the ACH that the payables, the liabilities were liquidated within 90 days of the end of the budget period, which is what's required. So, sometimes the unauditeds are submitted, they're due November 30th. So the review might happen before the 90 days. And so, oftentimes if the fiscal rep reviews and something has not cleared the bank yet, they'll just note that on the GSCRF. It's not, there's nothing wrong with that. They'll just follow up with that next time during their next visit to make sure that it was liquidated within the 90 days as required. And then the final review they do is based on the schedule of fixed asset purchases. If you have anything listed there, they will review the documentation for the purchase along with any procurement documentation. That is if they haven't done it already during routine monitoring. That is something that fiscal reps frequently look at during the years. If you have any major asset purchases, they would look at the information. So if they haven't previously looked at it, then they would look at it as part of the unaudited financial statement review. If during the review, the fiscal field rep identifies an unallowable cost or reporting discrepancy, then the fund balance will be adjusted, or if there is no fund balance, a fund balance might be generated to account for that change. Once the final fund balance is computed and confirmed, the fiscal field rep prepares a letter that's sent out to you notifying you of the amount that's to be budgeted on the next year's contract as prior year carryover. This is a sample of the letter. It references the unaudited review for your 2021. Your contract number will be up here. And we've completed the review of the unauditeds for your agency, and we've determined that there is an unexpended fund balance of X. And then you'll be contacted by Division of Community Services regarding disposition of this carryover. And what they'll do is they'll let you know that you have to submit a 2022 amendment to account for that full amount of carryover. So I know that some 2022 contracts have been recently submitted, and you could estimate your carryover. If you get really lucky and you hit the number exactly, then you don't have to do an amendment, but that's rare. So you will probably have to perform a 2022 amendment to incorporate the full carryover. If you have no carryover, this letter will just say the review has determined that there is no carryover. So then, and then the only thing is that the unauditeds are just that, they're unauditeds. So the contract is not fully closed until we receive your independent audit with those expenditures reported as well. We perform a reconciliation, and then you get a separate letter notifying you that the final determination has been completed and the audit is closed. Let's see, should we assume that backup will be requested during the review after receipt and not required with the submission? Well, to be honest, to try and speed things along, you could certainly include the your report that you based the unauditeds on. So whether that's a revenue expenditure report, whether that's a cost summary or budget report, whatever your system calls them. What you use to prepare those numbers, you could certainly submit that with the unauditeds, and that's going to give your fiscal field rep a head start and possibly less time that you might have to spend with them during the review. So you're welcome. And that's really it. If we have more questions, I think we got all the questions so far. If anybody has a question, you can either enter it into the chat. If you want to unmute yourself, you can go ahead and do that. Right.
Okay.
Hello?
Cindy?
Yes.
Cindy, for individual personnel, say this person, Joe Blow, has we budgeted for a certain amount and then it actually went above 10%. And then, but in total personnel costs, we were under.
Mhm.
Do you still have to do an amendment for just because the one person is above 10%?
Well, let's see.
We had to
So,
last year.
you'll have to do okay, let me step back. So I think this is the scenario that you're talking about. Within PS, there's a change of greater than 10%, but it's all within PS. Is that what you're?
Right, let's say one line item is above the budgeted amount, but yet in total personnel costs, we were either on or below.
Right. So in that case, you can use the unaudited as the amendment because that change between positions is all within the salary line. So there's no change between the major cost categories. So you can just fill in the correct column on here. So you would just put the amended numbers in columns 9 and 10, and then the amendments could be used, or the unaudited could be used as your amendment for that scenario.
Okay. So we won't have to do a complete new amendment like we did last year.
Correct. That's what we're trying to avoid. We're trying desperately to avoid having everybody have to do that.
All right. Thank you very much, Cindy.
You're welcome. Any other questions? No? Okay. All right. Well, like I said, if you have questions as you're going through and preparing these, please feel free to reach out to your assigned program analyst, your assigned fiscal rep, and they can help you work through everything. So again, thank you for your time and have a great day.
Thanks, Cindy. So
right.
we will set up some time for DYCD.
Yes.
Perfect.
Yeah, I will have Mindy maybe send you a meeting invite. How's that?
That would be great. Thank you so much.
Great. Thank you.
All right. Have a good one.
All right. Take care. Bye-bye.